the lenders are going to have to make a change in order to accommodate and grab in those trillions of dollars of loans that they've been previously declining. So you can qualify, you just don't know it yet. So this is the beginning of monthly seminars that we're going to start doing. What we have found with a lot of our customers and clients is that most people really don't understand a lot of the guideline changes that have taken place. Back in 2008, before the mortgage crisis and everything happened, we went through a change in the industry, but a lot of that change was regulation changes. We had to be more licensed. We had to have more restrictions. We had to, certain things couldn't happen, had to be disclosed in a certain way. But now that we're coming through COVID, and now that we're coming through a lot of what has happened all over the world, forbearance agreements, defaults, people are not able to work right now. What we're finding is that the lenders are changing a lot of their guidelines. So back in 2008, 9, 10, 11, there were regulations, disclosure changes. Now we are starting to see mortgage guideline changes, which is a benefit to all of us and all of our clients and customers.
Well, hello everyone. I am Royal Forcell. I am the broker of record for Redemption Realty. Thank you guys for joining us. I just want you guys to know that any questions you have, feel free to ask. We're going over some of the programs and changes that have happened in the mortgage industry. I myself have been in the mortgage industry for about 16, 17 years, been a broker for over 10 years. And we've learned a lot. We've gone through the ups and downs of the real estate market, and now's a very, very critical time. If you're looking to build wealth, if you're looking to get retired at some point, you can do that through real estate, utilizing some of these programs that we have that we're discussing here today. So if there's also any questions online, feel free to post them, and we'll get to answer everyone's question before you leave here today. A little bit about us. We are a small real estate firm with over 50 years of experience. Between myself, our agents, our partners, there isn't much in the real estate industry that we haven't seen. So when we tell you that we're doing these seminars now, because now is a critical time. Going into the year 2022, interest rates are at historic lows. As we all know, property values are probably at historic highs. And one thing I like to explain to any client is if you go back in time, let's say you go back 15, 20 years, think about where prices were 20 years ago. Now, knowing where prices are today, do we all maybe think or have thought it's a good idea, maybe we had bought more than one house at the time? Absolutely. So this is what we're talking about today, is showing you the programs that are out there that are going to help you leverage your equity and your resources of today to project out just even 10 years into the future. The way it feels right now, what we've seen with the projections, we may actually double prices from today. I know it's hard to conceive, but how do we afford it? What's the affordability? But this is what this industry has historically done. And with our 50 years of experience, like I said, if you knew back 20 years ago what we know today, would you have found a way to make it happen? Absolutely. So 65% of homeowners are unable to meet the regulatory documentation requirements because if you've tried to get a loan before, we all know that they want to know first and last, tax returns. They want to know if you've owned a home before. They're going to go through all your finances, bank statements, all that stuff. And has anyone ever experienced being declined for a home loan? Anyone? Yeah, I'm pretty sure.
You don't want to admit it, but
well, no. It's because there's a lot of regulations out there. Because if you cannot prove, there's a rule called the ability to repay rule. This is under Dodd-Frank that took place in 2008. Prior to that, we had programs that will let you state your income. So if you felt like you could manage it, you're probably going to get approved. Once the mortgage correction happened, now they say you've got to prove everything you said. If you say, you make, it was a housekeeper that was making $30,000 a month back in those days. Now they say, no, we wanted you to document and prove that you can repay. That's what happened with Dodd-Frank. But we're going to get into showing why some of those rules have been a hurdle for especially underrepresented communities.
I want everybody to know and understand. See, the banks, the lending institutions, they know that they have been declining us. They know that they have lost trillions of dollars from the declines. But they also know that the capability of us making our monthly mortgage payments is obvious. We've been owning homes for 40, 50, 60 years. And some of our parents and grandparents have maintained that. But so that what's happening right now, the change, the shift that we're seeing right now is the lenders are saying, wait a minute, $1 trillion in loans that we have been trashing, let's figure out how we can make this into real loans. Oil is on the front end. I've spent my career on the back end working with secondary marketing lenders and Wall Street investors, and I knew the first change was disclosure and regulation. This change, the lenders are going to have to make a change in order to accommodate and grab in those trillions of dollars of loans that they've been previously declining. So you can qualify, you just don't know it yet.
So we've got programs that take away that part of the qualification process. So our lenders through our program have decided to remove the income qualification from these loans. So as long as you've got a down payment of at least 20%, we're able to take away income as a reason for being declined. We also have a program called 100% financing, going back to what we would refer to as the good old days, where you can get 100% financing. You don't have to bring in any down payment. Now, this program is reserved for those people who have full documentation, meaning you have the ability to prove that you can make this payment and have sufficient income and reserves to make the monthly payment. But if you had a trouble with coming with money down, you can, come in with the 100% financing. So that's not a hurdle for you to become a homeowner or to upgrade. We have programs out there that shows you that you can qualify, and you do actually qualify.
That's a valid point that Royal just brought up about the reverse mortgages, because what we find a lot is parents have these properties, they put a reverse mortgage on it, and then the kids do nothing. They've passed away. And now the family members are just like, okay, what do we do? So the lenders typically will give you some time to figure out what you want to do. But what we are starting to see, because we are a full service mortgage real estate company, on the back end side, and Tim, you can attest to this, you see this a lot. There's foreclosures and defaults on properties that have reverse mortgages on it is skyrocketing. So you've got the parents passing away, and I saw it myself. Within 30 days, one of our clients got a letter from the lender saying, we're so sorry to hear about your loss, but guess what? You got 30 days, or we're gonna put you in foreclosure. How cool is that? Know what's in your hands. Family members, if you don't understand reverse mortgages, call us. We can help you, because we've seen too many foreclosures. People lose their parents' homes that they've worked for 30, 40 years because they didn't understand what the lender was asking them to do. I would also tell you, a lot over the last couple of years, people know the term forbearance. That means you're not making payments, right? Mm-hmm. Why not go into a permanent forbearance, take your property, put it into a reverse mortgage so that you don't have to deal with the stresses of the payment. Some of the new guidelines, and this is not even on our subject today, but we used to think that the age 62 is when you can get it. Yeah. Guideline change, what did I say in the beginning? Lenders are changing the guidelines, they're stretching it out, 55.
For 55.
Yeah,
55.
You can now do reverse mortgages starting at 55 years old. So who benefits from these changes most? Like we were saying, who are these programs? We were just discussing a reverse mortgage, but the previous program we were discussing, where we were saying, hey, you don't have to prove all this income anymore. Who's benefiting from that? The self-employed, people who are business owners, Like I said, the people who don't work enough hours, or people who work as a family unit where, to collectively you guys can make the payment, but when each individual has to be underwritten, it's something missing, or they don't have enough income, or haven't been on the job long enough. People who are part-time workers, sometime workers, who just, people who seasonal, like I said, anyone who has the ability to make payments or has equity, someone's interested in becoming an investor, you can get access to your equity. And that's critical. During a time like this, like I said, when we're at prices that are at an all-time high, interest rates at an all-time low, there's huge amounts of equity if you're a property owner in California. So definitely take advantage of seeing how much you could qualify for, and we're not even going to check any of your income. It's going to be based on some ratios and what you tell us that you're comfortable paying, because that's what it's going to come down to.
That's not your challenge. Come and let us work that out. I've always told you before, because we have over 50 years experience in this business, we are so uniquely structured here because of our backgrounds. Everybody has not 50 years of doing the same thing. We have backgrounds in different areas of mortgage and real estate. So we run into problems where most of your brokers and lenders you see today, they run away. You don't qualify, you gotta come back to us in a year after your seasoning and all that stuff is done. That's real talk. I had a client come here just last week and told us, we didn't know. They told us we have to wait a year. No, you don't. We'll get it handled for you within the next 30 days, 45 days.
Well, here are the three most important things that we look at. Like I said, income is not up here. First, it's just the LTV, means the loan to value. I have $1 million property. How much am I able to get to? $750,000, because we go to a 75% loan to value. That's for cash out. If it's just rate and term, like you were mentioning with hard money, you can go up to 80% of that property's value if it's no cash out.
One more language.
It's coming, though. Just give it some time. Confirm your credit score. Now, here's the thing. Like Tim was saying, 800 FICO score. Hey, you got an 800. You can give us a call too. We're not gonna turn away 800. We just know what it is. For people who want to get to these programs, our minimum right now, to where we don't have to check income, do anything, is a 640. So that's, typically it's been, you need a 700 score for that. You need a 720 for that. We can go all the way down to a 640. And now here, get this. Let's say it's not a 640. Again, we have collective experience. We're very good, and I have a very good relationship with my credit vendors. We can do scenarios of what if, and let's just say, you know what, you could have got an extra 20 points by just paying down this credit card $400. So we have access to that software that will tell you, here's what your credit score could be with these simple changes to get you over the hump. So I know a lot of people are getting more credit savvy, and they've got their credit score on their phone from one bureau, and then they run and pull it and it's lower, because that's a different algorithm. You gotta get with the mortgage broker to pull a mortgage credit report, and that's gonna tell you what your real credit score is in the mortgage world. And also, like I said, we can tell you how to improve that score without necessarily doing any credit repair. So literally, I can rescore a credit report in literally like a week and a half. So, I've seen it jump as high as 80, 120 points. So you come in with with a 600, and we can get you probably to 680 or 700. So don't be afraid. If you got credit issues, still give us a call. Even without the 800, we can work with you. That's why I said we're trained to say yes. That's our first mind, is to say, not that you can't, it's how can you.
Right.
So you come to us with the desire to be a part of this life-changing market, and we're trying to help you do it. We want to say yes to you. And if you got equity, the answer is always yes with us, because we can creatively figure out how to get to where you want to go. So, yeah. And then verify reserves. Reserves are what lenders typically want to see, that you have money after you get the loan to make the payment with. Listen, because you're working with us, we can do this without any reserves on these programs. So if you're getting a situation where you're trying to get cash out of a house that you live in or currently own, the answer is yes. you do qualify. Let us worry about how to make that work. You just come to us knowing that you want to participate in this greatest revolution of wealth transformation that there is. And I'm telling you, now's the time to do it. Don't wait another 20 years and be like, man, I heard this 20 years ago. So do it now. For those who've been working on that job for a long time, you got income, you make money, you've been paying rent. I just have a serious question. Why? You can still rent and own real estate as an investment. I'm pro real estate as an investment. So even if you are comfortable, you've been on your job a long time, you're comfortable living where you live, at the apartment or in somebody's basement, it's okay. We'll work with you. But think about and consider buying an investment property anyway. Because if you buy that as a primary, you can get 100% financing. So literally, if you've been on your job, you've heard your job is your credit company. It's true in the real estate world. Like literally, we can help you buy what you can afford. And it doesn't have to be where you currently live because you know the prices are sky high. And even in the outskirts, prices are getting sky high. The thing is, now's the time. You can get 100% financing to buy and just hold. Because I'm telling you, it's gonna get even more ridiculous. If you thought prices are high now, just wait.
Some people think they can only take advantage of FHA because they're gonna be a first-time home buyer. Nope, not required. 100% not required. Property type, owner-occupied, single-family residence, all the standards. Go from an apartment to a condo. It's yours. What is the big deal? Income limits on this 100% program, not required. So you don't make too much money to get it FHA. It's because it's not required.